I think the rate cuts were too small and too late. They should have started in June, and you can wonder, why did they wait until now? If they're going to make the cuts now, the cost to the economy has been huge because they didn't start earlier. You know, all the interest on the national debt is paid at this rate that the Fed is setting. But that's done. So now looking forward, my worry is that they're going to continue leaning against growth into 2026. That has political consequences. That has real-world consequences for people, for their jobs and their mortgages. So my worry is the Fed's model is so old. They're using 50-year-old models, Lord Keynes models, to run the economy, and it's harming the economy.
Maybe, but I guess my question is, are you sure that just because the Federal Reserve cuts interest rates that it actually trickles down to mortgage rates? Because I don't know if that's true, that just because the Fed keeps cutting rates, it catches up with mortgage rates so quickly.
That's exactly right, Maria. That's what's been going on the last few months. They've been talking about cuts, but the 10-year yield is stuck above 4%, and that means mortgage rates are too high. They have to change the model, the concept of what they're doing with financial markets to give more assurance that they're defending the dollar. That way, the whole yield curve can come down. It's called a price rule monetary policy. Right now, what they do is inflation targeting, which has been wrong for 30 years. It's just a model that doesn't work. So if they shifted, then you could have 10-year yield lower as they lower the short-term interest rates. There's no reason the U.S. economy, as strong as it is, should be paying this high an interest rate across the board. That it's because people don't trust the Federal Reserve on the dollar and on the model. They think it'll be somewhat random walk in terms of how the Fed sets interest rates. That's what we saw in the Biden administration. They didn't know when to hike. They didn't know when to cut. And it ended up being a political decision. So they've got to break out of that model, create an actual workable new model for the modern age. And that would give us lower interest rates across the yield curve. That means mortgage rates could come down for a change.